Hey everyone, welcome in to another daily editorial here on the KE Report. We are chatting with Matt Battiali, editor of the New Energy Letter, which is published under the Mangrove Investor, which I will link to below this interview. Now, Matt, you were just at a recent Money Show conference. We bring on some Money Show attendees, speakers, and also the editor-in-chief to get kind of a lay of the land in terms of what people are talking about. And the last time we had on the editor in chief, Mike Larson, he was mentioning just how many people seem focused on the broad averages and the rebound that we started to see right at the beginning of that recent conference. You were there representing a couple resource companies. Can you give us a bit of a insight on what the attitude was of the attendees towards the resource stocks broadly?
Yeah, they weren't interested. Yeah, I really, I have spoken at the money shows in the past, and this was the first one I've spoken at in a little while. And there weren't many mining companies there. There were quite a few oil companies, but there really weren't. There was a copper company, a nickel company, a rare earths company, and a silver company. I don't recall there being any gold companies there. And the main takeaway was generally indifference. I attended the nickel company's corporate presentation. They had maybe a half a dozen people in the audience, and a couple of them wanted to sell them marketing. So it wasn't just as opposed to, like you said, the generalist sessions. People are still very involved in the S&P 500. A lot of people that I spoke with are trading cryptos. They're trading options. So one of the interesting things to me was that the lack of interest in the natural resource space, particularly these were small companies, was not a lack of risk tolerance. I think it was more just a lack of knowledge. Nobody's talking about the energy metals outside of our little, universe. And so the generalist American retail investor they don't know much about them right now.
Well, Matt, as a contrarian, it sounds like that's a contrarian's dream because there's a big trend that's happening, whether people are awake to it or not. And you can see it happening with battery manufacturers and car manufacturers coming down and partnering with some of the critical minerals companies. But it doesn't sound like the generalist investor has woken up to that yet. I mean, I guess, do you think that if in the future shows like this were to have more of a focus on EVs, electrification, on the green technologies, do you think that it would bring through the door some of those people that have that high speculation tolerance, but maybe aren't aware of the space and they're just not aware of some of the opportunities here?
Yeah, I absolutely think that's the case. Here's the thing about electrification, and Shad, you know this. There's billions and billions and billions of dollars are being invested in the fundamental infrastructure, right? The factories, the supply chains. You don't plow tens of billions, hundreds of billions of dollars into a sector like this just on a whim or on a fad. These guys are making these investments with the expectation that, number one, it's going to be a long-term return on their money, and two, that they will make a return on their money. And so in my mind, yeah, because we're deep in it, we see these investments, we track these investments, and we understand the implications that this is the pump being primed, and eventually people will begin to reap the rewards of it. I think that, yeah, a show like the Money Show, if they started having, even just a line or like a path of education and companies that present now, it doesn't have to be a lot, but if they just started offering that sort of thing now, the people that follow it, they get in, maybe they make a little money, they come back next year, they make more money, they tell their friends, yeah, this is exactly the way I would build this sector up. But yeah, to me, I don't think we're all that early either. I think that potential is building up and up and up because, there are other short-term kind of headwinds that have everyone's attention. Obviously, we had inflation ramp up when we came out of the COVID lockdowns. It took a long time for the supply chains to unwind. There were all these stresses on people's discretionary spending. And so there are headwinds, but it's not stopping this long-term trend. And in fact, the opposite is happening. We're seeing more investment into alternative energy. We're seeing more investment into electric vehicles. We're seeing more investment into electric gadgets, like chainsaws and lawnmowers and that sort of thing. So the fundamentals are there. The share prices are going to begin to climb. And yeah, if you put people in front of a bull market early, they'll love you forever.
Seems like the share price thing is kind of the sticking point because from my understanding, a lot of the people that attend the money shows are more traders. They're looking for trends to play, but is there something that these companies you think can do to appeal to more of this trader audience outside of simply getting their stock to go higher so that there is a trend, an uptrend for these traders to ride?
Yeah, I mean, I think part of it is just there's just a lack of interest. I mean, one of the main speakers, and I won't name him on here, but he came out very anti-electric vehicles because of his political point of view, and he claimed that EVs were the worst performing sector in the market, and that just frankly wasn't true at all. And if you looked at the performance of like cars, the ETF cars, the first half of this year, the electric vehicle ETFs outperformed the S&P substantially. The second half of the year, it has underperformed the S&P, so it's declined faster than the S&P has. But at the end of the day, I think there's maybe a 5% difference between the performance of the S&P year to date and the performance of these electric vehicle ETFs. And so part of it has to be mindset. Part of it has to be, if you're a trader, there might be opportunity in that sort of volatility. But I think there's a risk factor that some of these options, especially short-term options, carry a lot of risk. So it makes more sense to trade those options on blue chips where you have less company risk. But honestly, when I look at the news around electric vehicles, and let's just stay there for a minute. Electric vehicles outside of Tesla, most of the news is about the failures, the really high profile failures of like Rivian, or some of these other startups that didn't make it. I've written about some of those in the past where it just takes a lot more effort to start a new car company than maybe some of these entrepreneurs thought. But yeah, I see that as part of the problem, or I see that as a sign of the opportunity that we still have in the electrification space. I mean, it will also take a little while for the investment chain to move down to the mining companies. And so, when I was at this conference, I was there. You have this tiny little copper company, tiny little nickel company. They're asking about production. The retail investor would come up and say, "Oh, well, what about, how much will you produce this year?" And the answer is none, because these guys are developing their asset, or these guys are still exploring ground. And I think that's another step that needs some education for American retail investors. They don't understand the implication. If you put it in terms of like developing technology, the retail or American investors seem to be smart and hungry. If it's tech, if it's biotech, like drug development, they're excited about that. But they just don't understand mining, certainly not the way Canadian retail understands mining, I think.
Man, I think that's such a good point, because a lot of people, even when we just talk anecdotally to people here in the States, and you mentioned that you're interested in commodities investing, they almost always just wonder how much copper are they going to produce, how much nickel they're going to produce. They don't understand development stage companies, exploration companies. They don't understand royalty companies. So it's kind of a different world that needs some education. But we can point to two areas of the electrification space that had a big bump in this particular niche, and that's lithium and uranium. Both of those went on big runs. Both of those attracted new investors. Both of those attracted young investors. And unlike the gold and silver space, it wasn't a hard money discussion. It was around tech. It was around electrification. Do you think that people could take a page from that book in the copper, nickel, that side of things? What's happened with uranium? What's happened with lithium?
I absolutely do. And if you want to look at the kind of the spokes model for electrification, you have to point to Robert Friedland, Ivanhoe, and Ivanhoe Electric, and Ivanhoe Mines. I mean, he really understands how to tell this story really well. But he's one person, and most people have never heard of him. I think if you compare copper to uranium, like uranium had several pretty prominent natural resource people out there pounding the table, and then it got a lift. And then, Cameco, which is the Exxon Mobil of the uranium space, ripped off a huge gain. I think we need those follow-ons, where we need the price to move. We need some of the big copper companies to really catch wind and make some people some money. The producers, one of the other issues is that when you look at the prominent copper space, the headlines have been primarily negative. You look at Cobre Panama shutting down, and is that First Quantum? I forget who owns that, but their share price got it absolutely demolished. So negative headlines create negative sentiment, and it's really hard to tell a longer term story about the importance of these metals against that sort of backdrop too.
Matt, what about different exchanges and these companies being listed more on, let's say, the OTC, whether it's the OTC Pink Sheets, the QX, the QB? Are some of those investors that you saw at that recent money show, are they just not interested in those exchanges?
Yeah, I do think there's a skepticism. I mean, that was a question that was asked. I don't remember if it was a panel discussion or just a one-on-one conversation, but yeah, it was like, well, are you on the NASDAQ? And, mining companies aren't going to list on the NASDAQ, or I shouldn't say mining companies, exploration companies aren't going to get a listing on the NASDAQ. Or if they are, I would look sideways at how much money they're not putting into the ground by maintaining that listing. Unless they're fairly advanced, it's hard to justify spending that much money on a U.S. listing when, the goal of these companies is to put that money into the ground, into exploration, And so you do end up with these, certainly the ones that are listed in Canada end up on the OTC. A lot of companies don't even bother. Like I can't even think of any junior Australians that have OTC listings. They just don't care. And it's another great place for resource investors to find these battery metals opportunities or listings in Australia. So yeah, it's a conundrum right now.
Well, Matt, just one more question on this. Do you think it's also just a matter of the narrative not being easy to understand? If you talk about car companies, people understand, okay, you sell cars. If you're talking about tech companies, you can understand the idea, okay, here's what you do. You got a software program, or you're a cloud-based service, or you're a cryptocurrency, and you got a crypto coin. It's pretty easy to get their head around it. I don't think most investors even understand what they're even investing in a lot of these companies. But when it gets to mining, we get into all this crazy stuff about drill results, and is it oxides or is it sulfides, and how big is the resource, and how much of it's going to convert over, and look at these studies, the PEA and the PFS. It's not a very good story to attract investing. Do you think the industry just needs to simplify the narrative to simple things that attract investors?
I agree with you 100%. I mean, that was when I went out and was doing consulting work, that was the goal, was to help companies simplify the story, because it's necessarily a technical industry. But the difference between like someone who's developing a new drug is they don't put the engineer, the biotechnician, as the CEO, right? But in the mining industry, we have geologists and engineers as CEOs all the time, and they're so deep in the weeds that they use acronyms or technical jargon, and they just can't tell their story. And so I absolutely agree, Shad. I think it's just that it's a complicated industry that's made more complicated by this inability to tell your story.
Well, it sounds like there's a lot of problems then that aren't sucking investors in. And we've heard that before. But again, one thing that can bring new investors in is quite simply stronger uptrend. So maybe price starts moving. Maybe these companies get a little bit more money to allocate towards marketing, to changing their stories. And maybe we will see a different vibe at some of those money shows. But I guess until then, you need to be selective, and you need to make sure that companies that you're looking at are actually out there trying to garner some investors' attention. Because if they're not, then hey, there's almost no chance of them actually being discovered. But hey, Matt, very interesting hearing your takeaway from that money show. And it's more of a assessment of what traders and generalist investors are looking at and what they aren't when it comes to the resource sector. So thank you very much for those insights. We'll chat again in another couple weeks.
Sounds good. Thanks, guys.